In this video, we're going to try and figure out where the price is going, trying to work out what direction or what's the most likely direction the price is going to go and its very next move. Now, this is something that is really important to be able to do, but I think really there are a lot of rookie and new traders or even struggling traders out there don't really pay enough attention to this. What they do is they have a system or a strategy that they use and they just kind of follow that blindly. They don't ever take a step back to try and figure out, well, what is the chart telling you about where it wants to go? You know, are we in an uptrend? Are we in a downtrend? Is the market consolidating? You know, really just try and get behind the market and figure out what is the most likely direction the price is going to go next. And then once you have a sort of like an idea of this or a bias, then you can look into using your favorite entry technique to try and get into the trade. So from my perspective, to be able to follow the price and to figure out where price is going next, one of the things I like to have on a chart is a 100 moving average. Now, this isn't the be-all and end-all of this particular way of analyzing the markets. It's just a very quick way of being able to glance over to your charts, you know, when you're looking at many, because, you know, typically you'll be looking at, you know, 20, 30 different currency pairs. It's a way of looking at your charts very quickly and getting an idea as to which direction the price is going in and whether it's worth looking at that chart at all. So I use the 100 exponential moving average, and that's this line over here. Okay, and as you can see, what we typically seem to happen is that when the price is below this 100 moving average line, it tends to move lower. So whilst the price holds below this level, it moves lower, making lower lows and lower highs all the way down. So what that tells us is whilst the price is below this level, it would probably be a good idea to look for short entries, to look for opportunities to sell the market. Whereas if the price was above this level, so if we move back in the charts here, for example, and see where the price is here. So whilst price is above this level, then it would probably be a good idea to look for buying opportunities. Of course, we have to take into account the other bits of price action, so support and resistance levels. We look at the momentum of the candles itself as well, but that's something that's going to come with experience. So if you're new to trading, or if you've been struggling with trading for a little while, using the moving average is a nice, easy way to kind of get into the markets and to try and understand what the markets are trying to do. Now, there's no magic sort of bullet here. There's there's no magic indicator or combination of indicators. When it really comes down to it, what we want to boil it down to is just trying to figure out which way's the price going to go next. So looking at the moving average, looking at the overall price action, you should be able to tell from any point on the chart what it's going to do. So for example, let's randomly go back on the chart here. Okay, so let me close my eyes and go back as far as possible, right? And what we'll do is we'll then step forward, a couple of candles at a time and try and figure out what price is going to do and how you would go about analyzing it and finding your entries. So if we look at the chart at this point in time here, and I'll zoom out a little bit, we can see that the market has been in a consolidation zone, but it recently broke out above a high, and that high was this guy over here. Okay, so the market was moving sideways for a period of time, and then at one particular moment, the market decided to break out above that level, which it does over here. Okay, and at that point in time, we've got to start thinking to ourselves, well, that's a bit of a bullish sign. The market has already indicated that it wants to go higher by breaking out of this. As long as we hold above this breakout high here, right, as long as we take our entry above that level here, then we should be in for a good opportunity to buy the market and to make some money. So what do? We extend this line. Let me get rid of that and put in a horizontal line. So it was, where is it? Roughly at this point here. So we extend that line there. We wouldn't necessarily get in on the first break there, even though you could. You would want to wait for the market to confirm a little bit where it's going to go. So we would have this line in here and say, well, you know what? If the price were to close above this level, and this is really simplistic, obviously we'll go through entry techniques later, but really simplistic, just a breakout of a level here. We could say if the market were to break out and close above this level, then that might be a good indication it's going to go long, that we're going to get an opportunity to buy the market, right? So what you do is you would, as soon as the market closed here, you would put in your order to buy or your entry level. You put your stop somewhere beneath the lows there. That's typically a good place to put your stop loss, you know, sort of behind a technical high or a technical low. Not right behind it, because that's where the market makes, that's where they go stop hunting, but you know, a little way behind it, somewhere sort of, you know, maybe 10, 20 pips behind the level, just to provide you a little bit of protection, okay? So you'd have your stop somewhere around here, and then you'd be looking for at least 1-to-1 on this trade before you take profit. So you could, in theory, take profit somewhere up here, or you could have waited. The market pulls back a little bit. That might have been a little bit difficult for your psychology, but all the same, you can see that eventually it goes on to hit a profit target. So if you were going for a 1-to-1 or a 2-to-1, eventually it does do that, which is obviously a good thing. But let's look at other opportunities. So once the price is above this level, we want to be looking for opportunities to buy, right? We're trying to figure out, where is the price going? You know, retail traders, they try and overcomplicate this. They want to throw 1,001 different indicators on there, but you don't need to do that. You really, really don't. In fact, you're probably closer to the way that you want to be trading as a professional trader when you first start out than when you are going through that sort of learning phase of throwing loads and loads of indicators on your charts, looking for that magic combination. You know, that's what you typically do when you've been burnt a few times from the original way you trade. So, you know, I don't know if you remember, but many people, when they first start trading, they kind of roll up to their charts and they look at the price and they think, oh, this looks like it's going up, I'm going to buy the market. Or this looks like it's going down, I'm going to sell the market. And that's not too far away from what you want to do. The problem when you're a new trader is that you don't have any risk management. You don't have any strategy around what you're doing. But actually at the core of it, you're probably doing more right than you are when you're sort of 3 to 6 months into trading, if that kind of makes any sense and doesn't confuse you too much. So anyway, back to this. So we're looking to figure out, where is the price going? Is the market is above this level. We say if it holds above this level, we want to buy. So we would have had another opportunity to buy here. You could have had a little counter trend line in there and bought above this level. So somewhere around here, you would have made money. You could have done it here as well. Little counter trend line in there, something like that. When the market breaks and holds above that level, you could put in a buy. Okay, and then there isn't really an opportunity to do that there. And then you move along the charts and you look for the next opportunity. Now, here is where people go wrong. You see where we are on the charts right now. We were above the moving average, all the way above here, and that's where you wanted to be buying, and that's where you would want to make money. Then you see that the market takes a rather aggressive sell-off. Okay, now what people make the mistake of doing here is that they're like, well, this is a pullback to the moving average, the way these previous ones were. But then they're not really. If you look at the price action, look at how labored this is to get the market up to this level. Then in 2 or 3 short candles, well, I say short candles, long candles, but in 2 or 3 candles, you get the market basically wipe out what took it days and days and days to build up. So it's up at this level here from here, which took a good few days to do that. And then in the space of 2 4-hour candles, it's all the way back down at the bottom again. That's a bit of a bearish sign. The problem is that retail traders at that point, they're like, well, it's a bit of a pullback, I still want to buy. They're not taking into account, and that really is the kind of the core of this video here. They're not trying to figure out where price is going. They're just trying to trade from a system. That my system says, well, it's above the moving average, I must buy. While it's below, I must sell. Whilst that might be part of it, and that might be where you start it, you still have to look at everything else. You have to look at the highs and lows. You have to look at the momentum of the candles. And if you do that, and it's not too complicated to do it, if you do that, then you're going to start to find yourself in a very, very good position as far as your trading goes. You're going to be taking better trades. You're going to be more consistent. You're going to be making more money on your trades because obviously you have more confidence behind them and you'll have a higher strike rate as well. Okay? So to summarize the video here, what you want to do as a trader is you want to try and figure out where price is going. I know that sounds obvious, but I actually think that there are far too few people that actually try and do this. They just trade a system and they've got absolutely no regard for what the price is doing on their charts. They're not paying attention to the little things like the big momentum candles going against the way that you want to trade. you know, or a big support or resistance line. They're just kind of, my system says I'm above the moving average, I will buy, or I'm below the moving average, I will sell. No. We use the moving average. It gives you a little bit of context. It's a nice way to kind of glance at the chart and see what's happening, but it's no more than that. We still need to look at the price action itself and figure out where it's going. Okay? Excuse me. So I hope you found value in that. Go away, look at some charts now. See if you can figure out for yourself. Just do what I've done here. So, excuse me. You don't need to be right at the end of the charts where you've got no other data. Go back and zoom, go back into the distant past and move forward on your charts like I did here. Move forward a little bit at a time, and try and figure out where the price is going. Remember, this isn't your trading strategy. This is just part of it. This is what is going to get you to be trading consistently and profitably. But you need to take into account all of these different aspects of trading. Otherwise, you'll just be a rookie, newbie retail trader for the rest of your life, and you won't ever really make much money. Okay? So thank you very much for watching, and I'll catch you in the next video.